Hi, I'm Victor. I'm an active value investor. And in this video, I wanted to cover CareTrust. This is a real estate investment trust. The symbol is CTRE. They operate facilities, properties that allow the elderly to go live and be cared for in nursing care facilities in places where they need some form of health care. I believe this space is going to be in high demand for a long time. Our population is aging, and people will need properties like these for their later years in life. I've been an investor in CTRE for a little over 3 years, and they had their earnings call yesterday. So I wanted to update my analysis and share that with you. I like to scorecard my investments. There's 4 questions I want to ask and then make a decision on this stock. First, do I want to be in the industry? Is the company operated and performing well? Is debt less than 3 times EBITDA? And I want a discount on the stock. Based on that criteria, I make a decision whether to buy more shares, sell all my shares, or hold my position in this particular company. CTRE announced their earnings yesterday, and here's their income statement. First, the revenue increased slightly. I think earned interest was higher. Interest rates have gone up, so that's a good thing. The interest expense at the same time went up on the expense side. So that's a negative. It went up about 7 billion. So that's something that they got to keep an eye on. They had an impairment, meaning a paper write-off on one of the assets they have, one of their properties. They probably brought it down to current market conditions. And then it was nice to see the general administrative expense went down. So that's a good thing to see on the P&L. Overall, they operated with a net loss, but I think it was that impairment that caused the net loss. So that wasn't overly concerning to me, by the way. And we'll see in the statement of cash flows that impairment truly is a paper loss. Their balance sheet looked good. No big drastic changes. Their debt is stabilized on all the senior secured loans. But I did see their revolving credit facility increase, so I'm going to keep an eye on that. Statement of cash flows, the impairment, charge off, it's purely a paper loss, so it gets added back. We start off with the year's net loss in this case, but then you add back that impairment because it truly is a paper loss. And overall, their net cash from operations was fairly good. I expected it to be lower, so it was good to see that it was 144 million. And their purchases of equipment, furniture, fixtures, and so forth, it was somewhat in line with last year. It wasn't a big surprise there. So they produced really good free cash flow this year. If you'd owned CTRE for the last 5 years, your investment would have gone up almost 29% in value, and you'd be paid a 5.6% dividend. And really, that's why I own this stock, is the dividend. And if it holds its value and goes up, to some extent, that's great. That's the outcome that I want out of an investment like this. I'm not shooting for a 5x bagger or a 10x bagger. I just want that dividend. I want that cash flow. Over the last year, it's only gone up almost 1%, but again, it pays that big dividend. So it's been a stable stock and has been on a rise recently. So it's good to see it rising. It'd be nice to see it continue to rise and give me a good return here in 2023. I value companies based on their free cash flows that they're going to produce, and I discount those free cash flows to today's dollars. In the case of CTRE, I updated the free cash flow that they produced in 2022, 137 million. I'm going to grow that free cash flow by 5% in years 2, 3, 4, and then the perpetual growth would be at 2%. I'm going to use a higher discount weighted average cost of capital of 9.5% because their balance sheet did not have the ratio that I want. So I'm going to increase the weighted average cost of capital. With all those factors, I come up with an intrinsic value that is 1.8 billion, and the market cap's almost identical, 1.87 billion. So right now, this investment's fairly priced. It's you're actually paying about a 2% premium for CTRE, and so there's no big discount available on the stock. The debt to EBITDA, it's a pretty high debt to EBITDA. Understandable because they're investing in real estate. So they have these long-term debt instruments. So they're paying that off over 10, 20 years, and they have to carry a lot of debt. So that's understandable, but it's still not hitting my ratio. So taking a look at CTRE, the performance in 2022 is exactly what I want out of this investment. Stable, boring. They produced free cash flow of $137 million, which was higher than I expected. The dividend rate at 5.6% is excellent. I really like that cash flow. For 2023, a repeat, just consistent growth, profit, and free cash flow. The revenue, I believe, is going to go up slightly because now that we're through COVID, I think there was some reluctance to admit, elderly to facilities that had a lot of people in them. That's where like COVID was, causing or a lot of deaths were occurring during the COVID periods in these elderly facilities. But now we're through that big danger zone. So I think more people would be admitted, and CTRE should see an increase in revenue. My outlook long-term, this is a nice, stable company. In a volatile market, it's good to have CTRE in my portfolio. That way it kind of anchors their portfolio. I have a solid winner in the 5.6% dividend. And, my growth stocks may go down this year again, or they may go up, but this one for sure is going to be stable and reliable. And that'll enable me to beat the S&P in 2023. All right, so let me scorecard CareTrust. Is this an industry I want to be a part of? Yes, I want to be a part of this industry. Stable, performs as expected. The company is operated very well. Their debt is too high. I'd like to see them reduce their debt. And there's no discount available on the stock. So I'm going to be a holder of CTRE and keep getting that 5.6% dividend. Well, thanks for watching the video. I appreciate it. Hope you found it interesting and discovered something new about CareTrust. I really enjoy recording the videos, and I've gotten great value from listening to other investors on YouTube. And I hope you're getting value out of my video. I don't make any specific recommendations to buy a particular stock. It's not the intent of the video. It's just to share my experience as an individual investor. In this case, I'm an investor of CTRE. Good luck investing in 2023.